Hi guys, this is Alex from Kronos Trading, and today I want to be covering how I've been able to generate about 67,000 US dollars of profit in only 2 months. And this trading one market with one single indicator. So let me just get right into it. So essentially for this strategy, what you're going to need on your chart is two indicators. You want to highlight basically the New York session, and you'll want to select this indicator Forex session by Adrian Hummel. And you go into the settings and essentially just tick off all the boxes, but leave this one on. All right. And then also you want to have on your chart the Omega V2 by Kronos Trading. Go into your settings, and the only thing you'll have to change is to increase the filtering a little bit. So I recommend the sweet spot for me is between 0.7 and 0.8. And for risk type and speed, just leave it as is. So let me get right into the strategy and how you can make money trading the New York market open. So first of all, the ticker here, the symbol that you're gonna need for this is the MNQ. So what is the MNQ? It is the micro E-mini of Nasdaq 100. So it's basically like trading the US 100, except you may have a little bit more volume because you're trading an asset that's coming directly from the CME. So I recommend any intraday trader that want to trade a Nasdaq 100 to actually be trading the MNQ instead of the US 100. However, if you don't have a choice, if the broker that you're using is only offering the US 100, then it's fine. You know, it's usually pretty similar. Anyway, for the sake of this video, I'm going to be trading the MNQ. Then go into your time frame setting and select the 2 minutes. This strategy also works with the 1 minute. However, if you trade the 1 minute, you will have to select the medium speed, all right? But the results are exactly the same. So just go to fast if you're trading the 2 minutes and medium if you're trading 1 minute. I personally like to trade the 2 minutes because it removes a little bit of noise. And sometimes I've noticed that if I trade a 2 minute, I can stay in the trend a little bit longer. So again, it's really up to you. The net profit is roughly the same here. An entry for me would be the New York session typically starts at 8, local time, Eastern time. But because I live in Europe, I can essentially be looking at pre-market what the overall trend gonna be. I have way more time to analyze the charts and prepare my trades. What I like to do is, although the New York Stock Exchange opens at 9:30, as you can see, there's a lot of volume, boom, like very explosive volume at the market open. But I like to be positioned right when the New York session starts. And why is that? Because sometimes the market can basically just keep dumping. So what if here, the market opens here at 9:30 and you miss that signal here? Let's say you wait for the market open to get your entry. Well, what if the market just kept on dumping all day? That's kind of sad because you would have missed out on your entry, right? So what I found is that if I start trading about an hour and a half to 2 hours prior to market open, then usually I am extremely well positioned in case the market just like start ripping up or dumping down. Let me just do a quick example of a trade right here. This one, I don't know if I would have taken this for some reason because I'm seeing that the market is kind of wanting to go down. I would have probably waited a little bit for it to clear up or either to retest this cloud. But right here with the sale, I would have entered short, kept my risk about here above this previous high. And then I would have tried to target like a 1, you can even go for 2 right here, because I would have already exited my position by over 80%. And why is that? Because what I do is that take profit 1, which is at the close of this candle here, I would take off at about 13 points, so that's 0.10%, I would take off already about 60% of my position. So this is basically what I call an intraday swing trading. So it's not really scalping, because scalping would be like you hold your position for 30 seconds, 1 minute, whatever, very short. But here it's essentially like holding your position from anywhere between 5 minutes to sometimes all day long. You will see whenever you do your back test, you could hold a position for a very long time and never closing it and just letting your runner go as long as it makes money. But here at about 12 points, I would have closed my position by 60%. And from TP1 here to TP2, that would be an additional 10 points. And at this point, I would have probably taken out another 30%. So it would be just 10% left in the market. And once I reach TP2, if you guys know me, you know that I typically like to move my stop loss to break even once I take out this take profit 2 level. What that would look like is something like that. Okay, so I enter here in a short position with a stop loss above this high. And what I would do is that once we reach TP2, my stop loss would basically be back to entry. And then this is a risk-free trade. You're not risking anything. What you would do here is for this long position, in case the market starts flipping, what you could do is this, all right? Keep your stop loss probably like, maybe this would be a little risky in my opinion. That's a lot of points. So I would probably keep it like a little bit below that cloud, like right here. So that's our risk. And then go up to 2. There's no TP1. However, I bet that if we go into the replay, you typically get your levels. There you go. So you get your take profit levels already marked on chart. So in this case, because the volatility is quite low, the indicator here is recommending that you keep your first target to a very low level. You keep it to a very conservative level, which in this case would be only 6 points or 7 points. However, why is it doing this? It's because the indicator is predicting that this move is not going to go very high. As you can see, market pulls back, and then we hit this first take profit. Sometimes there are bugs. Guys, this is not because of us. This is because of TradingView. It just doesn't like stay on the chart. But we hit TP1, all right? And once you hit TP1, remember in this strategy, you have to take off 60% of your position. This is very important, guys, 60%. So you're still 40% into your trade at this point. This trade is probably going to end being a break-even trade if you get the opposite signal here. So let's see how it plays out. Boom, you get a very aggressive. Your stop loss, I think, was about here. So your stop loss would have been triggered. This is fine. This is part of trading. And here we've got that very aggressive sell. And I would definitely be interested in going short, although my risk is going to be quite high. What I would do typically is keep it to like a max tolerance about 30 points. I would just follow the levels that are recommended by the Omega V2. And I would have already taken off like 60% right here, a quick 10 points. Guys, in this market, if you're trading with, let's say 10 contracts, that's already $200, right? Please bear this in mind. That's $200. A lot of people on this planet with $200, they're set for the day. You take off 60% right here, and then we're still 40% in the market. So let's see what happens. And right here, this is where we close 30% of our position. And here the final either 5% or 10%, it's up to you. You know, some people like to have a runner that just keep running all day, but let's see what happens. Boom, we hit TP2. Guys, we're almost completely out of our position. Now you move your stop loss to entry. That's all you got to do. This is a risk-free trade. We're out of our position right here. But what happened? We basically got out of the market. I think overall, if you use 10 contracts, I can tell you that this right here, you would have already made like about $800. But obviously I use 10 contracts because I have the capital for this. If you have a lower capital, just use a lower amount of contracts. Start with even 1 or 2 in order to test out the strategy. So be really careful with this. But if you follow the indicators, the indication of the Omega V2, you will eventually be profitable. You will see it's not that complicated. You just need to follow the risk management, the target levels that are predicted by the Omega V2. It's that simple, guys. If you like to see more videos like this, please let me know, and I would be really happy to cover any subjects for you guys. I mean, I've got some ideas for sure that I think might interest you, and also in the future, I could be covering how to use multiple Chronos indicators together in order to see confluence and improve your win rate. Keep it up, guys, and safe trading to you all. Bye-bye.